It's hard to believe, but barely a week goes by when we don't hear news about another blockchain project releasing its own NFT-based collectible game. What's going on? Why are NFTs catching on so fast? Is the market really that big? We've got a few reasons why NFTs are taking over the crypto market. Keep watching to find out. Celebrities love them. NFTs can be bought and sold on special marketplaces that use blockchain to record transactions. They're bought in a similar way to how artwork is purchased from an artist, directly from the person who created the NFT or someone who later acquired it in a marketplace. Although NFTs are not new, they have lately been fueling an explosion of interest and investment as investors seek exposure to the digital art space. The NBA has taken notice. Let's break the ice about how NFTs have been given future trust by the NBA. They sold a collection of NFTs based on Top Shot, a digital marketplace for videos on the blockchain, for $208 million in March. They sold a collection of NFTs based on Top Shot, a digital marketplace for videos on the blockchain, for $208 million in March. The top-priced item was a LeBron James highlight reel that sold for $208 million. As more crypto companies launch their own non-fungible tokens, major corporations are following suit. They're doing it to capture sales in online marketplaces and reach crypto-savvy consumers. Burberry recently released a set of NFTs as part of a runway show. The luxury brand explores whether it can use the technology to sell unique items or limited editions of clothing and accessories. Proof of ownership. It's no secret that we live in an increasingly digital world full of software, apps, and services that help us accomplish things we couldn't do before. But these services typically don't give us ownership over what we create. This can be frustrating for people who want to own things they make and feel like they should get something besides goodwill in return for their work. NFTs allow digital creators to gain ownership over their creations, which is a good thing for everyone involved. By nature, anyone with basic knowledge of coding or software technology can easily duplicate digital items. This is where NFTs come into play. These are unique digital objects that cannot be copied or changed under any circumstances. The owner holds the sole rights to the digital item and can do whatever they desire, sell it on a marketplace, or even destroy it for fun. Yes, people do this. Freedom of trade. Crypto is a currency that anyone in the world can use for payment. This makes it extremely useful as a store of value and a medium of exchange. However, from a censorship resistance perspective, there is one major drawback. In order to make a payment, you have to give out your public address. If an adversary controls your public address, they can track all of your incoming and outgoing payments, which compromises your privacy. Blockchain analysis companies like Chainalysis would be unable to do their job if it weren't for this inherent flaw of cryptocurrencies, for better or worse. NFTs have no such weakness. When buying NFTs, you don't need to give out any information about yourself other than how much ETH you want to send and to whom. It is truly anonymous. No one can trace the transaction back to you unless they know that it was you who sent the ETH in the first place. And even then, they cannot prove that you bought an NFT. NFTs are easier to grasp. Yeah, NFTs are pretty simple to grasp. Even your grandma could do it. Most people don't have an intuitive understanding of what it means to own a coin or how cryptocurrency works. It's easier, however, to grasp what it means to own a piece of art or your favorite rapper's newest song, especially if you're paying $500,000 for it. Last year, an NFT of a digital collage by artist Beeple sold for $69 million at Christie's. Beeple is a well-known digital artist, but before the sale, he was not considered a household name. The mainstream media has since described him as a rising star. This is similar to what happened in 2017 when CryptoKitties exploded and took over the Ethereum network. The game was built on the ERC 721 standard for non-fungible tokens, NFTs. Within just weeks, the game took over the Ethereum network and made headlines around the world. While it's great to see NFT adoption continue to grow, it's important to note that CryptoKitties came out almost 4 years ago. Particularly in crypto time, that's a long time ago. NFTs democratize digital art. Think of it like a spoonful of art, a tasty treat for your eyeballs. NFTs make it easier for artists to make money from their work without having to go through the middlemen that have traditionally controlled access to the market, e.g. galleries. It's all about utility. You got us, we just can't help ourselves. We're hooked on NFTs. Just please don't tell our long-suffering wives or our long-suffering tax accountant. Jokes aside, despite its name, cryptocurrency isn't really a currency. Yeah, we can see you scratching your head. Really, it's not even a very good medium of exchange or a useful store of value. It's too volatile volatile for the first and too ephemeral for the second. NFTs are far more interesting in that regard. They're digital artworks, virtual land deeds, collectibles, and a whole lot more. The blockchain ensures that they are unique, authentic, and verifiable. More importantly, NFTs have use cases outside of trading them back and forth, like baseball cards or Pokemon cards. And unlike crypto, they can be used to buy things like games and software services. Collector's item. Crypto art is trending. And man, that's awesome. The New York Times ran an article on the future of NFTs in March 2021, where they stated that crypto art is becoming mainstream. When we're talking about art made out of code, the medium is as important as the message. What was it like when you first started collecting NFTs? Did you see this same potential at the time? We saw the growing potential early on, but we also saw how nascent and undeveloped it was at the start. This feeling led us to get involved and help grow this space by bringing in more collectors, artists, and enthusiasts through events like Mountain Montana, which was a collaboration between Mountain Dew and Super Rare that helped bridge these communities together. It took full advantage of crypto's legacy. Remember that time crypto was about the tech? Those were the days. Cryptocurrency has come a long way since its early days associated with the dark web and illicit activity. Think back to when Bitcoin was first introduced in 2008. It's hard to imagine how far the industry has come since then. In 2017, Bitcoin and blockchain were still in their infancy, but they were also starting to become more mainstream. But it wasn't until 2018 that the U.S. Securities and Exchange Commission, SEC, started to crack down on a lot of fraudulent and deceptive practices in the initial coin offering (ICO) market. This legitimized the space by creating a more fair playing field for small investors and entrepreneurs alike. Fast forward 3 years and NFTs have taken over the crypto market, becoming a new asset class that's garnering interest from everyone from artists, musicians, and athletes to major brands like Nike, Coca-Cola, and Mattel. Breaking records. Well, you know what they say about breaking records. Break one and you've got nothing left to break. NFTs have helped drive record volumes in decentralized finance, DeFi. The DeFi market is booming, and part of this growth is due to the rise in NFT sales. In fact, last month, MakerDAO, a platform for creating DAI stablecoins backed by crypto collateral, saw its highest ever volume of $2 billion in loans taken out by people looking to buy NFTs. Major brands are now getting involved with NFTs. In March, Buffalo Wild Wings released an exclusive series of digital collectibles tied to its annual NCAA March Madness tournament as an experiment with NFT technology. 1,700% growth. Yes, you heard it right. The NFT market has exploded over the last few months, with no end in sight. In fact, a report from blockchain data analytics firm non-fungible showed that sales of NFTs on Ethereum grew by 1,700% between January and February of 2021 alone. That's just one of the many signs that NFTs are really taking over the crypto market. High-profile buyers. Glad we could help you score a deal. This is where we play Imagination Land. In February, Twitter CEO Jack Dorsey sold his first tweet ever, from March 21, 2006, for $2.9 million in an NFT auction. But he's not the only one who has cashed in on these unique items. Rapper Lil Yachty sold an NFT for his unreleased song for $15 million. Digital artist Beeple sold an NFT for more than $69 million at Christie's auction house. And Canadian singer Grimes' digital art collection titled War Nymph sold for nearly $6 million in an NFT auction last year. NFTs aren't just a novel concept anymore. They're real, and not just any reality either, but one that's captured the imagination of some of the biggest players in the world of crypto and blockchain. The future for NFTs is bright. If you're interested in this type of technology but have been underwhelmed by its potential so far, it may be worth taking another look. We're packed up and ready to hit the road. What do you think about using NFT to sell your own digital items? Will you be able to earn a profit? Let us know below. Please like this video if you found it useful and subscribe to our channel for more.